Welcome to Skytech-Lens. It all began with a single seismic decision. On August 1, 2025, the U.S. government, citing national security, imposed a staggering 50% tariff on all copper imports under Section 232 of the Trade Expansion Act. Copper, once just an industrial commodity, was suddenly reclassified as a strategic asset, on par with military-grade materials. The administration claimed this would protect American industry and spur domestic production, but critics warned the U.S. simply couldn't meet its own demand. The U.S. relies heavily on imports, especially from Canada, its largest and most trusted supplier. The tariff didn't just disrupt trade, it severed a vital artery in the North American supply chain. Overnight, decades of economic stability and cross-border cooperation were shattered. American manufacturers, who built their business models on reliable Canadian copper, faced immediate uncertainty and soaring costs. The move was unilateral, leaving no room for negotiation. The policy, meant to shield U.S. industry, instead exposed a deep vulnerability. The stage was set for a conflict that would redraw the economic map. The consequences would be felt almost immediately, starting with the very markets the policy was meant to control. The market's reaction was swift and brutal. Copper prices on the COMEX exchange surged to nearly $6 per pound, signaling panic. U.S. copper prices decoupled from global markets, creating a two-tiered system and fueling instability. Overnight, $4.2 billion evaporated from U.S. company balance sheets, contracts and supply agreements thrown into chaos. Manufacturing plants across the Midwest slowed as copper shortages hit assembly lines. The tariff acted like a dam, blocking the flow of a resource as essential as water. UBS forecasted a 0.5% GDP contraction in a single quarter. The policy, meant to protect, triggered a financial crisis at home. The $4.2 billion loss was just the opening salvo in a costly trade war. A single political decision had unleashed a torrent of economic consequences. Canada's response was immediate and decisive. Ottawa froze all copper export contracts to the U.S., halting shipments at the border and leaving American factories in shock. Canada, which supplied over half of U.S. copper imports, turned off the tap. The government announced a $1.8 billion investment to reorient trade infrastructure toward Asia and Europe. Major mining companies quickly redirected shipments to new buyers in Japan, South Korea, and China. This was not a temporary move, but the start of a permanent shift in global trade routes. Canada began securing long-term contracts with Asian partners, breaking free from reliance on the U.S. market. The Northern Wall was built, not just of policy, but of new global alliances. Canada's bold pivot demonstrated a determination to control its own economic destiny. The U.S. was left isolated, its supply chain severed. The era of North American copper cooperation was over. The crisis exposed America's deep dependency on foreign copper. The U.S. produces just over half the refined copper it consumes. The rest is imported, mostly from Canada, Chile, Peru, and Mexico. Domestic refining capacity is critically low, meeting only about 5% of demand. Years of plant closures and underinvestment left the U.S. unable to fill the gap when imports stopped. Ramping up domestic production would take years and billions in investment. Copper is everywhere. In homes, electronics, vehicles, and infrastructure, an average car contains 50 pounds of copper, an electric vehicle nearly 4 times that. The sudden cutoff from Canada made this vulnerability painfully clear. There was no quick fix, no way to dig or refine enough copper overnight. The tariff, meant to foster self-sufficiency, instead revealed how interconnected and fragile the U.S. supply chain truly was. The shortage was not a temporary inconvenience, it was a systemic crisis. The American economy's Achilles heel had been exposed. The lesson: no nation, not even the most powerful, can stand alone. The copper shortage rippled from Wall Street to Main Street. The auto industry was hit first. Electric vehicle costs soared, production slowed, and jobs were threatened. Construction costs jumped, adding up to $22,000 to the price of a new home and pushing homeownership further out of reach. Utility companies, facing surging copper prices, filed for rate hikes, raising electricity bills for millions. Green energy projects stalled as copper-intensive wind and solar installations became unaffordable. Small manufacturers lost contracts to overseas competitors with cheaper copper access. The ripple effect was everywhere: higher prices, delayed projects, and looming layoffs. A trade policy dispute had become a nationwide economic crisis. The pain was felt in every corner of the economy. Economists drew chilling parallels to the protectionism of the 1930s. The Copper Tariff, like the infamous Smoot-Hawley Act, was meant to protect American jobs, but instead triggered retaliation and economic pain. The US wasn't punishing a competitor, it was sabotaging its own manufacturing ecosystem. Shortages and price hikes were symptoms of a policy out of touch with global realities. Canada's pivot to Asia echoed the retaliatory cycles of the past. The US, by isolating itself, risked being left behind as new global supply chains formed. Protectionism eroded trust, increased costs, and made the country more vulnerable to shocks. The lessons of the Hoover-Era were clear. Protectionism leads to contraction, not prosperity. The copper crisis of 2025 was a painful reminder of history repeating itself. The cost of isolation was being paid by American workers and families. Canada's reaction was more than a trade dispute, it was a geopolitical shift. The 50% tariff shattered Canada's role as a passive supplier to the US. Canada quickly repositioned itself as a global competitor, investing $1.80 billion to expand Pacific ports and logistics. Diplomatic efforts targeted long-term contracts with Japan, South Korea, and China. The global center of copper trade began shifting eastward. The US, once the world's largest copper consumer, lost its leverage and became just another customer. American factories faced shortages and high prices, while Canadian copper fueled rival economies. The US risked isolation from a global supply chain now centered around Asia. Canada's pivot showed that even close allies will forge their own path when trust is broken. A new world order for copper was emerging. The US found itself on the outside, looking in. The true cost of the copper tariff is being paid by ordinary Americans. Utility bills rose as power companies passed on higher copper costs. New cars and electronics became more expensive, putting them out of reach for many families. The price of a new home soared, and essential repairs cost more. Every household felt the copper tax, a hidden burden in daily life. The promise of protectionism turned into a reality of higher prices and shrinking opportunities. The tariff, meant to help, hurt the very people it was supposed to protect. The disconnect between political rhetoric and economic reality had never been clearer. The 2025 copper tariff is a lesson in unintended consequences. A single decision unraveled decades of partnership, triggered a financial shock, and left the US facing shortages and inflation. The policy meant to strengthen America instead crippled its manufacturing sector. The fallout lost billions, production slowdowns, and a shrinking GDP. Canada's permanent pivot to Asia diminished US influence and left it vulnerable. The real cost was paid by American families: higher bills, expensive cars, and unaffordable homes. The attempt to protect the economy backfired, weakening the nation's global position. One flawed policy ignited a crisis, exposing the dangers of economic isolation. Thanks for watching. Subscribe the channel for more updates.